Stocks trade firm after the recent correction despite dissipating expectations of a US Fed cutting rates this year. Utilities, oil marketing companies and metals are the big gainers. FMCG and IT are soft.
Marquee investors like GQG, Morgan Stanley and Fidelity back Voda Idea's follow-on public offer that opens for the public today. The telco tells CNBC-TV18 it sees gains from a shift to 4G and higher average revenues per user driven by capex, and the money will fund over the next 3 years.
ICICI Lombard gains as its combined ratio improves. Just Dial jumps after margins expand. Angel One leaps on a sharp rise in orders and fees, and a strong business update powers up Brigade Enterprises.
Crude oil prices slip on stronger than expected inventories, even as possibilities of EU curbs on Iranian oil remain on the radar. US reinstating sanctions on Venezuela is not seen as a significant factor.
A very good afternoon. You're watching Halftime Report on CNBC TV18. I'm Ekta Batra, and with me is Mangalam Malu. Well, it's turning out to be a session which is better than expected because we have the Nifty, which has definitely recovered from the day's low. So it's up around 146 odd points from the day's low. The day's low was around 22,153. So now currently we're at just about 22,300. So good going for the Nifty. The mid-cap index has been shining from the start and it continues to do so. So the mid-cap index is currently up around 0.8%. No complaints coming in there. We have good traction coming in for the Bank Nifty as well, up around 0.4%. The good part is that the advanced decline ratio in fact has sustained and, might I say, marginally improved as the day has gone along. So that's a great indicator in terms of sentiment for the markets. As you can see, that widening gap between the green and the red line continues to stay strong. Hi, Mangalam.
Hi, Ekta. It was just an hour ago, right, on Chartbusters when we were talking about the market just being marginally flattish and not doing too much. And there you have it. Just as we left on that show, there was this big vertical rally that we saw on the Nifty that continues, and now has the market moved to the high point of trade, 22,300. Not only has it crossed past the 20-day moving average, it's also hovering around 22,300. The Nifty Bank hasn't, surged as much as the Nifty, but it hadn't fallen as much as well. The Nifty Bank continues to hold at that 20-day moving average itself. The broader market's doing well. A lot of individual news pieces taking stocks higher as well. Case in point, something like Capacity Infra, which at the bottom of your screen at the start of the show suggested that it's won a lot of orders coming in from some of the real estate players, including the likes of Macrotech developers and Raymond in Thane as well. So that's the stock which is up around 4%. And we are seeing some traction build in a lot of these metal names once again. So Tata Steel has moved to the high point of trade. Hindalco's moved well. That's at the higher end of today's trading session as well. The metals index itself comes up for you on the screen. And a big move is what we're seeing on Bharti Airtel. That's the one that's powering the Nifty ahead, up 4.5%. So virtually at a fresh record high for that counter as well, Ekta.
Well, yes, absolutely. The news from Capacity Infra just ties in with the likes of Brigade and what they've announced as well, and gives you a sense in terms of the kind of interest we're seeing in the entire real estate space. So it just re-emphasizes the amount of interest being seen in that space in terms of infrastructure coming up as well. So that's definitely a positive. Capacity Infra at the high point of the day, up around 4.3% at this point in time. But let's focus on some more companies now. We have Power Grid, which has surged in trade on the back of news flow as well as brokerage commentary. Vivek gets us up to speed with all of the details on Power Grid.
Well, that's right. So Power Grid, what's actually happened is that given the fact that there has been so much transmission capex that come up, especially in FY24, the company, in most of the projects has emerged as the lowest bidder under the tariff competitive scheme. So now, number one, it has emerged as the lowest bidder under TBCB for 3 projects, and this is to go ahead and establish interstate transmission system on a BOOT basis, which is a build, own, operate and transfer basis. Which are the 3 projects? Number 2 of the projects are in Rajasthan itself, so transmission system for evacuation from power from Rajasthan SEZ, both Section C as well as Section E, the company has won the bid. Along with that, the company also has won the bid to go ahead and establish a transmission system for evacuation of power from the renewable energy zone, which is Khavda in Gujarat. Now, along with that, very interesting note coming in from Goldman today morning. They're looking at the larger picture in terms of India's transmission capex. And what Goldman is saying is that Power Grid continues to remain their top pick. They have a buy rating. They have a target price of 355 rupees a share. They're saying that the Power Grid is the country's largest transmission asset developer. It's the top pick. They're saying that it is a play on the grid capex super cycle with a very large balance sheet. Along with that, they say that the company has the ability to fund close to 30% of India's FY24 to FY32 grid capex while continuing to maintain its current dividend payout. Lastly, they are saying that the company has structural advantages in terms of lower cost of funding compared to its peers, and also consistency of core regulated earnings is something that aids the company.
Right, that's about Power Grid, up around 3.5%, closing in on the 4% mark as well. But the stock that has been the stock of the morning so far, in fact, the first half of trade has been Just Dial, up in double digits at the high point of trade, closing in again on that 1,000 rupee mark for that counter. It's a good set of numbers that came in, which has the stock excited, but more so even the margins and the management promise of higher margins going forward as well has the stock higher. Rima joins in for our special segment Insight Edge to talk about what the management said to us and what she makes of that. Rima.
Thanks so much for that. Before that, just a quick recap of the numbers in case someone missed out. Very strong quarter. The company's reported a revenue growth of 16% year-on-year, quarter-on-quarter a jump of 2%, margins at a 4-year high at 26.1%, and this is ahead of the company's own guidance of 25%, and a profit jump of about 38% on a year-on-year basis. Now, we chatted with the management on growth and margin. On growth, he said that we're looking at a 15% revenue growth next year, and this is a good growth number given the current situation and what's happening with SMEs. On margins, he said, he indicated that margin expansion should continue. They've ended Q4 with 26.1%. Historically, they've seen margins of 27 to 28%. And he also, in a way, hinted that it's likely they will go back to that. Once they go back to those historical margin levels of 27 to 28%, that's when the company will decide what will they do once, with the margin benefits. Will they continue to invest it back in the margins and increase the margin levels, or will they look to up their advertising spend, get more aggressive on that, or increase their sales personnel? The other big question that everyone has, all investors has, the cash on the books, which is more than 4,600 crore rupees. He said we look at deployment, we look at distribution, all options are on the table, but for deployment, it has to make sense in terms of a positive unit economics over the medium term. Otherwise, currently the company invests safely, in bank deposits, FDs, they earn a 7.1% return, and that, according to the company, is a safe bet. Back to you.
Okay, all right, Rima, thanks very much for that. That's on Just Dial. We, in fact, earlier spoke to the management. Listen in to an excerpt of that conversation.
Target is to surely have a 15% plus kind of top line growth, which would be very good in current environment as far as SME health is concerned. As far as profitability goes, the business has significant operating leverage. And as I mentioned, while we have mentioned that the endeavor is to have 25% plus margins, but last quarter itself, we were at 26% plus. So once we reach that kind of 27, 28% the kind of margin levels, we will take a decision on whether to deploy part of incremental margins into advertising, which will boost my traffic and aid my monetization in subsequent quarters and years, or retain it as it is.
All right, well, let's move on. Vodafone Idea's 18,000 crore FPO has opened today. The company has raised around 5,400 crores already from anchor investors. Rima did catch up with Akshay Mundra, who's the CEO of Vodafone Idea, to talk more about the FPO details, the business outlook. Listen in to that conversation.
It could be modified. That is how we see things today. And you would have seen what has happened with 5G is that on the consumer side, there is not so much of 5G use case, and monetization has been a challenge. I think when the rollout happened a year ago, there was this sense of that when 4G came out, somebody missed out, so we should roll out quickly. Can it become a factor in terms of, again, gaining disproportionate market share? Now, we've had 5G for a year. We've not seen that happening. And the major difference there is that when we moved from 3G to 4G, on your phone, you could see a very big experience difference. 5G, that is not the case. The speed is much higher, but in terms of what you see on your small screen, that is not such a discernible difference. One is that the Indian ARPUs are the lowest, and I think lowest not by a small margin, by a big margin. So that is the important factor. The second thing to be kept in mind is that today, none of the players are returning their cost of capital. And it has not been just a year or so, it has been 5 or 6 long years. And that was the scenario when 4G investments were made. 5G investments have added on to that, and 5G monetization is still not to be seen. So the imperative for tariff correction just to get to a return on cost of capital being there.
So what should the ARPU be for you to be able to return your cost of capital?
Again, I'm not at liberty to say that, but there is enough commentary from our peers, and I would say that
300? That's the commentary from your peers?
So that number appears to be right. New funding is largely for growth capex, and our plan to meet the existing debt, vendor payments, and the government obligation is out of internal accruals. Now, of course, we expect the internal accruals to improve as we make investments. The only thing I would say is that you are aware of the reforms package, and the reforms package has a provision that post the moratorium, the deferred installment series which is there, the government can convert that to equity. So I think this is somewhat into the future. Probably we will need government support for some time, but over a long period of time, we believe that our operations should be sufficient to meet these obligations.
Right, that's about Vodafone Idea, up around 3.5%. A bunch of stocks doing extremely well as we speak. We have a big move which is currently underway on Trent. Trent has moved to the high point of trade with a gain of almost 4% right now. Alongside that, we're seeing a decent traction on names like First Source and even Navin Fluorine. Navin Fluorine has moved to the high point of trade as well. But here's a programming note. Join us today live from 5:30 p.m. on CNBC-TV18's Future Female Forward, the Leadership Circle. It's a transformative platform where women leaders come together to connect, express, and evolve. The circle of trailblazing women leaders from diverse fields will venture beyond the traditional discourse during this course of the discussion that we'll have. The Leadership Circle, which is not just about business strategies and professional accolades. It's about delving into the depths of personal journeys these women have taken. A bunch of them very inspirational, all on your screen. You can track all of this live at 5:30 p.m. today on CNBC-TV18.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Turning out to be a good session for us. Just want to point out a couple of stocks within the Nifty space, which is really stealing the limelight today is the entire telecom space. So Bharti Airtel is your top gain on the Nifty, up around 4% at this point in time. Also want to point out that HDFC Life is holding up well ahead of its numbers, and so is Bajaj Auto. So both those stocks are higher by around 2%. And maybe Infosys should come up for you because that one has been a bit sluggish post its numbers. In fact, the stock is down around 4% this month. It's down around 7% this year. Today, it's holding up well, so up around 1.6% at this point in time for Infosys. But Bain Capital, with a global AUM of or assets under management of $187 billion, is keen on increasing the pace of India investments to $7 billion in the next few years. Our colleague Nisha Podar caught up with the top team on the investment strategy they have in India. Bain Capital says it's India's moment due to political stability and structural reforms. Listen in.
We definitely think it's India's moment right now. I think it's the convergence of some trends that have been happening for a number of years. The first are some really powerful structural changes that have been made to the economy. Difficult to do and have taken time to manifest the benefits. But you're seeing that now with the ease of doing business, with the focus on some of these manufacturing, high value-added content type industries, which tend to pull along logistics, distribution. It pulls along consumer spending. You've seen this positive, kind of virtuous cycle of growth in other Asian economies, and that's happening in India now. The second is political stability. I think it's not an overstatement to say that this is a country that has maybe the most stable government set up right now. It's, I think, the first time since the early 1960s when you had a leader almost to be on a third term. And that's really important. It leads to consistency of policies, the ability for long-term investors to make those bets on the India consumer, on infrastructure, in other areas. And third, as Papa was mentioning, you're kind of in the second generation of investments. You have great entrepreneurial Indian families and corporations who launched businesses that have grown a lot, and they're now ready to, in some ways, turn them over to new owners to think about the next generation of management. And this is a big trend that we've seen in private equity markets in the U.S. and then in Europe and then in Japan, and now you're seeing it in India. Put all those things together, and that gives you a very, very powerful mix to support growth. And that's why I think everyone's really excited about India.
A very big exit has been made after 6 years in a large bank, Axis Bank. How has that particular experience been? And in terms of returns, how do you see that? Will that also encourage you for more bank investments?
Sure. No, it's been an incredible journey in partnership with Amitabh and the team and the board. When we invested in Axis several years ago, at the time, it was just coming out of a lot of the infrastructure lending related challenges. It was a bank that I think at the time had 5% ROE, gross NPAs north of 5%. And if you look at the last quarter, they had some of the best numbers in the street, right? 19% ROE, 23% growth, gross NPAs at under 1%. Yeah. So it's been an incredible transformation, and I think we've been really lucky and to be able to partner with that team and support them through that journey. The stock price is up more than 2x from where we invested. So it's been a great partnership. We're really happy and proud of, I think, what we've been able to do with the team there at Axis. And I think it also has given us a great insight and view into the broader economy and financial services that we hope we'll leverage into more investments in that space.
But financial services is something that you have been focused on, like 361, a more recent investment of yours. What are those potentials and propellers that you see in this space and the company?
Yeah, no, 361 is another great example. Karan and Yatin have built a great business. It's really a play on wealth creation in India, right? And as that wealth looks for professional management and investments into more alternates, and 361 is the market leader in that space. Just as a statistic, AIFs, which are alternates, one of the areas they're a leader in, has grown more than 3x in the last 5 years. And I think they've been one of the pioneers and very innovative, players in that space. And so, we think they're really well positioned, and we're excited about that journey. But to your question more broadly, if you look at financial services, they're in a bucket that we call more fee-driven businesses. And we like that space a lot, whether it's across asset management, wealth management. We think insurance could be interesting, especially as we potentially move to a unified license. That may see consolidation opportunities there. Lending has obviously been a segment we've been quite active in across Axis, L&T, more recently Adani Capital. And there's certainly parts of, I would say more specialty lending, whether it's affordable housing, SME, that we think, have really long runway for growth. And so really across that landscape, I think there'll be interesting opportunities. And, these are businesses that need capital over time. So I think it'll continue to generate opportunities for private equity.
Pawan, recently, many private equity players have started talking about manufacturing. That has been a capital-intensive sector in requirement of, funds. But private equity has steered clear of that. But you have made in the past some investments there in Hero MotoCorp. What do you think about this space, and what's Bain Capital's view for manufacturing investments?
Well, we're very bullish on manufacturing. Like you said, we've been investing in that space, obviously globally, but even in India now over, 14 years ago was our first investment. There's a lot of trends that support that. So clearly China Plus One, made in India, we've talked about. Through J.M. Bakshi, we've seen some of the investments in logistics that have reduced the cost to manufacture in India. I think there's a lot more capability and human capital development that's happening in India to support, more value-added manufacturing beyond assembly. I think the other piece that's fallen into place is really global interest to invest in scaling India. I think before it was very easy for companies to just say, I have a base in China, I have a base in Southeast Asia, let me continue to scale that. I think what you've seen for a lot of the global reasons, they feel we have to scale India. We need an at-scale alternative for our global supply chains. And we're seeing that in a lot of the companies we look at where, where initially you may not be the lowest cost. I think you have to get to global competitive cost, but investing to scale manufacturing, obviously Apple gets a lot of the headlines, which is, all the investments they've made in their supply chain. We have some portfolio companies that cater to Apple that, we're excited about those prospects. So, as we step back, I think, manufacturing, assembly, and, that spans both electronics, automotive, chemicals to a certain degree as well, even within pharma.
Yes.
We think there's going to be tremendous growth, and those companies to scale will need capital. And
All right, with that, we'll step into a short break. But on the other side, we have Sudeep Shah of SBI Securities joining in with some trading strategies on the other side. Stay tuned. Welcome back. The Nifty holding comfortably above that 22,300 mark. Let's talk about a couple of cues that are likely in the second half of trade, most important of which will be the Nifty weekly options expiry. The Nifty Bank and the mid-cap index, all of them doing well, with the mid-cap index actually taking the front honors, almost 1,800 stocks in the green for about 500 stocks in the red. The Nifty Bank, however, is not participating as much in the rally as the Nifty Bank, with as the Nifty rather, with a gain of just about 1/3%. What's important is that the Nifty has taken support at the 50-day moving average of 22,163 and gone past the 20-day moving average of 22,284. Important to see whether it goes ahead and sustains above these levels or not, because if it does, then perhaps we're in for some more short covering. The FIs have added nearly 9,000 crore worth short contracts in the last 3 trading sessions. For today's expiry, the 22,200 put is extremely active, telling you that support is strong around that 22,180 mark. But on the way up, the 22,300 call writers are equally active as well. They believe that the market may not sustain above 22,350, though if the market does sustain, then all of those 2.15 crore open interest writers will perhaps have to cover their positions. The Nifty Bank, the important support to watch out for will be the 20-day moving average, a level it hasn't formidably broken in the last many trading sessions. Just keep an eye out on X side. It's been a roller coaster of entry and exit from F&O ban for Exide. A few days ago, it entered F&O ban, then exited F&O ban, re-entered F&O ban, exited F&O ban, and now, with in all probability, it's likely to re-enter F&O ban in today's trading session as well. That explains why the stock perhaps maybe at the low point of trade after a big rally that it's seen in the last few trading sessions.
Okay, all right, Manglam. Thanks very much for that. Sudeep Shah of SBI Securities is now with us to discuss the technicals of the market. Sudeep, hi, welcome to the show. Well, markets have picked up pace. Seems as though we're on track for a possibly good close as well, unless there's a big surprise in the second half. What would your strategy be?
Yeah, good afternoon, Ekta, and good afternoon, Manglam. See, what we've seen in Nifty is that in the past few sessions, there was profit booking from higher levels, and that was due to the global factors. Now that we've seen crude prices also retracing back up to $87.5, markets, Nifty specifically, have taken support at its 50-day around 22,120, 22,150 zone, and has rebounded back. Now, what's happening is, and why this 50-day is crucial, is that this has not been significantly violated since the rally has started from November 2023. So we feel overall 22,100, 22,150 zone will act as a strong support. And from an expiry perspective, today also 22,200 and 22,300 put writers are quite active. So we feel overall any dip today closer to 22,200, 22,250 zone should be used to go long with a stop loss at 22,100. And on the upside, we feel levels of 22,450, 22,530 could be achieved within the next few trading sessions.
All right, and individual stocks, what would you pin your hopes on?
Manglam, I feel a couple of stocks that are breaking out on the upside. First of them is Bharti Airtel. Now, if you see Bharti Airtel, it was in an overall long-term uptrend. It is trading above its key moving averages in the short term as well as from a long-term perspective. And in the last 1 month, stock was witnessing consolidation. And today we have seen a breakout with volumes on the upside backed by open interest also. So I feel overall this stock can be bought with a 1240 stop loss on the downside and 1320 target on the upside. The second stock that I like is HDFC AMC. Now, this stock was consolidating since past 2 months within an overall uptrend. And today we have seen a falling trend line breakout on the upside backed with volumes and a rise in open interest. So I feel overall HDFC AMC looks good for 3950, 4000 levels on the upside and can be bought with a stop loss at 3720 levels.
Okay. All right, Sudeep, we're going to let you go on that note. Thanks very much for joining in and giving us all of those strategies. Well, for the markets, we're okay. Bank Nifty's come off a little bit. It's up around 0.3% as compared to 0.4% earlier. A little bit of a shave off there. We'll take a short break. On the other side, we'll connect with the management of Ramakrishna Forgings on a recent order win from a large EV maker in the US. So we'll discuss that more. Bain Capital, with a global AUM of or assets under management of $187 billion, is keen on increasing the pace of India investments to $7 billion in the next few years. Our colleague Nisha Podar caught up with the top team on the investment strategy they have in India. Bain Capital says it's India's moment due to political stability and structural reforms. Listen in.
We definitely think it's India's moment right now. I think it's the convergence of some trends that have been happening for a number of years. The first are some really powerful structural changes that have been made to the economy. Difficult to do and have taken time to manifest the benefits. But you're seeing that now with the ease of doing business, with the focus on some of these manufacturing, high value-added content type industries, which tend to pull along logistics, distribution. It pulls along consumer spending. You've seen this positive, kind of virtuous cycle of growth in other Asian economies, and that's happening in India now. The second is political stability. I think it's not an overstatement to say that this is a country that has maybe the most stable government set up right now. It's, I think, the first time since the early 1960s when you had a leader almost to be on a third term. And that's really important. It leads to consistency of policies, the ability for long-term investors to make those bets on the India consumer, on infrastructure, in other areas. And third, as Papa was mentioning, you're kind of in the second generation of investments. You have great entrepreneurial Indian families and corporations who launch businesses that have grown a lot, and they're now ready to in some ways turn them over to new owners to think about the next generation of management. And this is a big trend that we've seen in private equity markets in the US and then in Europe and then in Japan, and now you're seeing it in India. Put all those things together and that gives you a very, very powerful mix to support growth. And that's why I think everyone's really excited about India.
A very big exit has been made after 6 years in a large bank, Axis Bank. How has that particular experience been? And in terms of returns, how do you see that? Will that also encourage you for more bank investments?
Sure. No, it's been an incredible journey in partnership with Amitabh and the team and the board. When we invested in Axis several years ago, at the time, it was just coming out of a lot of the infrastructure lending related challenges. It was a bank that I think at the time had 5% ROE, gross NPAs north of 5%. And if you look at the last quarter, they had some of the best numbers in the street, right? 19% ROE, 23% growth, gross NPAs at under 1%. So it's been an incredible transformation, and I think we've been really lucky and to be able to partner with that team and support them through that journey. The stock price is up more than 2x from where we invested. So it's been a great partnership. We're really happy and proud of, I think, what we've been able to do with the team there at Axis. And I think it also has given us a great insight and view into the broader economy and financial services that we hope we'll leverage into more investments in that space.
But financial services is something that you have been focused on, like 361, a more recent investment of yours. What are those potentials and propellers that you see in this space and the company?
Yeah, no, 361's another great example. Karan and Yatin have built a great business. It's really a play on wealth creation in India, right? And as that wealth looks for professional management and investments into more alternates, and 361 is the market leader in that space. Just as a statistic, AIFs, which are alternates, one of the areas they're a leader in, has grown more than 3x in the last 5 years. And I think they've been one of the pioneers and very innovative, players in that space. And so, we think they're really well positioned, and we're excited about that journey. But to your question more broadly, if you look at financial services, they're in a bucket that we call more fee-driven businesses. And we like that space a lot, whether it's across asset management, wealth management. We think insurance could be interesting, especially as we potentially move to a unified license. That may see consolidation opportunities there. Lending has obviously been a segment we've been quite active in across Axis, L&T, more recently Adani Capital. And there's certainly parts of, I would say more specialty lending, whether it's affordable housing, SME, that we think, have really long runway for growth. And so really across that landscape, I think there'll be interesting opportunities. And, these are businesses that need capital over time. So I think it'll continue to generate opportunities for private equity.
Pawan, recently, many private equity players have started talking about manufacturing. That has been a capital-intensive sector in requirement of, funds. But private equity has steered clear of that. But you have made in the past some investments there in Hero MotoCorp. What do you think about this space, and what's Bain Capital's view for manufacturing investments?
Well, we're very bullish in manufacturing. Like you said, we've been investing in that space, obviously globally, but even in India now over, 14 years ago was our first investment. There's a lot of trends that support that. So clearly China Plus One, made in India, we've talked about. Through J.M. Bakshi, we've seen some of the investments in logistics that have reduced the cost to manufacture in India. I think there's a lot more capability and human capital development that's happening in India to support, more value-added manufacturing beyond assembly. I think the other piece that's fallen into place is really global interest to invest in scaling India. I think before it was very easy for companies to just say, I have a base in China, I have a base in Southeast Asia, let me continue to scale that. I think what you've seen for a lot of the global reasons, they feel we have to scale India. We need an at-scale alternative for our global supply chains. And we're seeing that in a lot of the companies we look at where, where initially you may not be the lowest cost. I think you have to get to global competitive cost. But investing to scale manufacturing, obviously Apple gets a lot of the headlines, which is, all the investments they've made in their supply chain. We have some portfolio companies that cater to Apple that, we're excited about those prospects. So, as we step back, I think, manufacturing, assembly, and, that spans both electronics, automotive, chemicals to a certain degree as well, even within pharma. We think there's going to be a tremendous growth, and, those companies to scale will need capital. And
All right, with that, we'll step into a short break. But on the other side, we have Sudeep Shah of SBI Securities joining in with some trading strategies on the other side.
Welcome back. Well, let's put the focus on Apollo Hospitals. We're looking out for acquisitions, says the company's MD Sunita Reddy. She also expects discussion on standard rates may take place post-elections. Listen in.
I believe it will take place post-elections. But all of us, we have already created standardized package within the industry. Our job now is to work with the government, as we have done during COVID, to really sensitize people who are looking at these rates about the true cost of healthcare and why quality is important, and therefore why we cannot make compromises. So clearly it is a discussion that will happen post-elections. We've already taken a slight tariff increase to really compensate for cost of inputs. But looking at this current dialogue, we've already done the packages that are ready for the government. which keeps our margin intact. But the focus is on cutting some of our costs, which we believe that with this, we can improve our margins by 100 basis points. So this effort will continue, and therefore margin expansion is something that you can continue to expect from us. It is a blend of both acquisitions and greenfield that will give us 2,000 beds in the next 30 months, and this will really continue to grow our network with a strong presence in metro cities. We always are looking out for acquisitions, and there are some acquisitions. Of course, we have also made Pune, which is an acquisition of 300 beds in Pune, Royal Mador Hospital. So we continue to have both options, and I think that you can expect to see significant growth in number of beds happen in the next 3 years.
Right, that's about Apollo Hospitals. Let's talk about Bajaj Auto, what they are likely to report in the fourth quarter. It's expected to be a strong set. The stock price move says that. Sonia joins in with the details. Sonia.
The Bajaj Auto stock has done so well, right? It's up almost 75% in the last 6 months. It's expected to report a very good set of numbers. It hit a record high of 9,356 on the 2nd of April 2024. Now, just to go through the numbers very quickly, Goldman Sachs, in fact, recently raised their target price on Bajaj Auto. They're expecting a very strong volume growth, a pickup in the export business, as well as better quarter-on-quarter three-wheeler performance too. Now, if you're looking at the key numbers, 24% volume growth is what the CNBC-TV18 poll has thrown up at 11,118 crores. The EBITDA is expected to go up by almost 30%. The margins are expected to improve 50 basis points because of better operating leverage, while the profits are expected to go up by 30%. Now, what's happened this quarter is that the volume growth has been very strong. In the domestic business, the total volume growth has come in at 28% for the domestic business. But the important bit is that even in the export business, there's a recovery coming through. Exports have grown by 19% year on year. Couple of export markets like Africa and South Asian regions have improved on the back of a lower base, and the margins will expand 100 basis points. But important to, 50 basis points year on year. But important to remember that the stock has also rallied quite a bit. Valuations are now on the expensive side compared to some of its peers. So we will wait for management commentary on whether this kind of growth is sustainable and whether export markets will pick up further. The numbers come in post-market hours today. Back to you.
Okay, all right, Sonia, thanks very much for that. Well, shifting focus to some important earnings now. IT major Infosys will be reporting their fourth quarter numbers. The stock has been sluggish going into the numbers. Today it's higher. Rima joins in with key expectations.
Thanks so much for that. So this could be the second consecutive quarter where Infosys posts a revenue decline. So we're working with a dollar revenue fall of 0.3% on a quarter-on-quarter basis. In constant currency terms, it should be a decline of close to about 0.5%. In terms of margins, the CNBC-TV18 poll throws up a slight margin expansion of 20 basis points to 20.7%. There will be a 2-month negative impact of wage hikes, but that will be offset by the cost optimization, the cost-saving program under Project Maximus. Profits, according to our poll, should be up 1.1%. Now, the key is going to be the FY25 guidance. Expect a conservative guidance from the company because in FY24, the company had to lower their guidance. So the broad range is seen between 2 to 6%, but if you have to zero it down, consensus guidance could be between 3 to 5% on the top line and on margins between 20 to 22%. Now, Infy had outperformed TCS from FY20 to FY23. So after a 4-year period, this year, FY24, it's TCS which has outpaced Infosys. Now, the question is, in FY25, will TCS continue to do better than Infy like they have in FY24, or will the tide reverse again? Other softer aspects to watch from the numbers. One, the headcount. Infy's headcount has declined for 4 consecutive quarters. There was a hiring freeze at campuses last year. If demand is picking up, and so this will be seen, hiring will be seen as a lead indicator if demand is picking up. Outlook on spending and discretionary demand, and will the company also call out an AI and Gen AI pipeline like TCS did at $900 million? Back to you.
All right, Rima, thanks a lot for that. That's about Infosys. But before we slip into a short break, the IT stocks are actually doing quite well. Infosys has seen a bit of a recovery from the 4% cut that we saw on Tuesday before we closed for trade. And Kotak Mahindra Bank is the other one which has moved higher as well. Take a short break, come back on the other side. We cover all things commodities. Manisha Gupta joins in with GP Sharma, who's the President, Met Department and Climate Change at SkyMet. Stay tuned. insurance companies are doing well. SBI Life, for instance, has moved to the high point of trade. And from the broader markets, we're seeing a decent traction in MCX as well. MCX is now up 4.5%, up above that 3,900 mark. And we're also seeing a decent up move in names like Trent. Now, Trent is just about 2% away from a fresh record high. On the way down, however, it's the gas distribution companies which are seeing some decline. IGL has moved to the low point of trade with a cut of almost 4.5%. And following closely is MGL as well, which is sitting with a cut of about 3%. So IGL and MGL are under pressure, while a bunch of stocks doing extremely well. Let's go across straight then to Manisha, who's joining in with all things Met. Manisha.
Oh, well, yes, all things hot, by the way. Severe heat waves, if you've, seen them, has been here now. And from severe heat wave yesterday to normal heat wave today is what we are dealing with. But Mumbai has seen the hottest day in April in the last 10 years, as the records show. GP Sharma is President Meteorology Climate at SkyMet. Mr. Sharma, hi, thank you so much for joining us. Well, we did talk about heat waves, but we've experienced one in this week itself, and it's really not nice. So what is the expectation now? Because there are yellow alerts and orange alerts as we speak about severe heat waves going forward within this week itself.
Thanks, Manisha. You see, yes, Mumbai saw a very hot day, like you mentioned, hottest in the last about 10 years, but it has eased out a little now. Basically, the wind pattern, which was all responsible for such extreme heat over the coastal city, is a little better now. The coastal town as such, by virtue of high humidity, even if the temperatures are in just about mid-30s, it becomes punishing, rather, I will say at times. And in any case, coastal station, they have a criteria of heavy heat wave at 37 degrees Celsius, unlike the interior parts of the plains wherein 40 degrees is a must. Okay, now coming to the heat wave as such, I will say the one good thing which has happened is the heat wave has been there over different parts of the countries at different timings. And they have not been very prolonged spells as such. So that means the extreme heat has not been there for large parts of the country simultaneously. Okay. Earlier we had southern parts, interiors of Andhra Pradesh, right in the beginning of the month. We did witness places like Anandpur, Karnool, Nandyal, and Kodappa, etc., far excess of 40 degrees. At the moment, the heat is building up on either side or either flank. That means on the western side, it's Gujarat and adjoining parts of Madhya Maharashtra. And on the eastern sides, it's West Bengal, parts of Odisha, Bihar, and I will say maybe Chhattisgarh and Jharkhand as well. But more crucial is West Bengal. Temperatures in excess of 42 degrees centigrade at a couple of places, Midnapur, Purulia, Panagarh, Bardhaman. This is the pocket which is the hottest at this point of time. And on the western side, Saurashtra in Gujarat and even the central parts, they are the hottest. Vadodara is very hot at 43 degrees centigrade. Similarly, like the state capital, Gandhinagar, along with Ahmedabad and Saurashtra, if you talk, Rajkot is topping with about 43 degrees plus, well above the normal by about 4.5 degrees. So these are the pockets which are building up now, and there is no relief likely, at least for the next about 4 days. Okay, Gujarat, no weather activity happens. It's a fair weather pocket, even in the entire month of April also, May also, nothing much happens there. But we can expect some activity coming up over West Bengal after about 4 days or so, Odisha, West Bengal, which will give a little relief. Peninsular India, yes, we will expect some relief straight away today itself for the next about 4 days, because the normal feature which we see over peninsular India, the trough that is getting activated, parts of Karnataka, both North and South Karnataka, even parts of interior parts of Tamil Nadu, Kerala, Andhra Pradesh, they will have some thunderstorm activity. So that's a little good news. Also, the good news is northern parts of the country have not had a flavor of this heat, which the other parts have been soaring like anything. And it will continue. Okay, Delhi hasn't touched 40 degrees so far. All the years since 2009, Delhi exceeded 40, except for 2012 and last year. But then it exceeds even 43 degrees Celsius. Okay, this time the maximum it has gone is about 39 degree, 39.4. That's a fall. But then it is not likely also. There are one after the other western disturbance. It is one now. Possibly you may see some light rain drizzle today also in Delhi, tomorrow also in any case. So this will shield us from the extreme temperatures. So northern parts of the country, Punjab, Haryana, Delhi, West Uttar Pradesh, parts of Rajasthan, they will stay a little better, and I don't think they will have extreme those temperatures, so they will not have heat wave condition. Yes.
So lucky North India is what we can say as of now. But as you said, the next 3 or 4 days can see above normal temperatures even now. And we have been reading those reports about severe heat waves to normal heat waves. So if Maharashtra or Mumbai is looking at a normal heat wave today, how long can we expect these above normal temperatures, as to say? And when do you see some relief coming in for Gujarat, Maharashtra as per se?
Gujarat, I don't see any relief because there is no major activity, weather activity expected. Maharashtra will have, maybe for a day only. That's today and tomorrow itself. We will have some, especially parts of Vidarbha and Marathwada. I don't see any relief coming up for Madhya Maharashtra because Pune, Nasik, Nandurbar, the Ahmednagar, this pocket, it is going to be hot. Okay, that pocket is not getting relief. Even the coastal parts also, Konkan and Goa, they will keep fluctuating between high and mid-30s. Mumbai will have some relief, all right, but that may not be very long. Once again, the temperatures will rise over those areas. But then some relief will be there for Maharashtra for about a day or two. And later, as I said, after about 3 to 4 days, over the eastern side, covering parts of Odisha and West Bengal, Gujarat, I fear that relief is not likely. Yeah.
Right, Mr. Sharma, thank you so much for joining in and giving us the update, the lowdown on what the weather is. While you give us the forecast on what's happening, we'll try and, keep ourselves hydrated. And here's a request to everyone else as well who's stepping out in this heat. Stay hydrated, stay covered, and take care of your health. That's extremely important. With that, we wrap up on this edition of Halftime Report. You stay tuned to CNBC-TV18 Business Lunch. We'll take all the action ahead.